Hello guys, welcome to a Trading Parrot. We got an emergency update. Bitcoin did an all-time high on a Sunday on low volume. Things could change at any point in time, but so far that all-time high is almost 126k. I need to update you on what's going on with my long, what's going on with my short. 4 hour is in a very critical support. We are potentially building a decent CME gap. I want to talk about whether that is bullish or bearish, how much upside can we squeeze out of the daily time frame, and if you're able to walk and chew gum at the same time, and this is not too much overwhelming, we're also gonna talk about the weekly time frame, because that huge large green candle that we are printing is screaming a huge message which you don't want to miss. Guys, if you want to trade Bitcoin on a decent exchange, look no further than 2bit. 2bit was built by the same people of Bybit, and in 2 minutes you can deposit your crypto and start trading without needing any KYC. They give you $50 for free to start trading. Now if you put your own money, you can squeeze out $30,000 in rewards depending on the size of the deposit and your trading volume. In today's video, as I mentioned, I'm gonna put a huge focus on the all-time high and the implications for the swing trade. I'll keep a little bit of time on the weekly time frame. That is gonna interest you if you are here as an investor and not as a trader. But I'm not gonna cover general markets. I'm not gonna cover Bitcoin dominance, altcoins, and all of that will be covered on Monday. I asked my community what they want me to cover. So Jose Hernandez is specifically talking about altcoins, so I'm gonna skip that one. Max, what's the chance that the price break out to yet another all-time high by Sunday close? We'll cover that, and we'll cover as well how could we be trading that from a long and short perspective. What's the chance, according to the data, that we will go back down? Because I have entered a short at 118,500, and I would love to hear, is it a chance of going lower, or should I find another strategy for exit? Particularly me, I'm not that far from that in my entry on my short. It's just one entry, and I want to discuss in depth later in the video what's my views on where I could be adding more. I have already mentioned that in an article on Patreon, so maybe he will find it at some point. All my patrons are already fully informed since the morning. Also, any idea what was behind this pump to all-time high during the weekend? And I think the government shutdown and the narrative of the debasement trade currently seems to be fueling what at least retail is perceiving as an opportunity to enter on Bitcoin right now. There's been a huge inflow on Friday as well. Options expired too. You can see how things were speeding up this week in terms of inflows on Bitcoin, going from 500, 400, 6, and almost 1,000 on the 3rd of October. That is just crazy. Obviously, we pinch the 60,000 cumulative flows into the spot ETFs for Bitcoin. Definitely that kind of set the stage for a big move. No, I wasn't expecting on the weekend. Of course, I don't know where the price is gonna go. I never know. But somehow in this channel, we tend to take profits 100% of the time. We got also some other things supporting some bullishness. Not bullishness in a sustained way, I will say 1 year from here, of course. But if you see one day that the chances of 50 basis points cut on the 29th of October were 1%, the day after is 2.2, and the day after you get almost 4%, pretty much you are doubling the chances while at the same time retaining 100% chances of a cut. All of that could change any point in time, or it could not necessarily have a bullish effect once it goes out. It could be a sell the news, but no one can challenge the fact that this is being perceived as an opportunity to trade it in a bullish way. And I can see already people on my Telegram channel going to my posts and clicking TTP charts to see what's going to happen with CME gap over this weekend. We already have one at 110 and it's still open, so we need to put an emphasis what could happen if we start on Monday and we have 2 CME gaps. Indeed, we have plenty more, but those are below 100k. All of this with the Federal Reserve trading against this, right? They are selling, they are reducing the balance sheet, they have done nothing but reducing from 3.41 trillion into 2.96 trillion. Now, this is a perfect environment to trade because we got a lot of increase in open interest. This is today the all-time high ever of aggregated open interest across all the exchanges. We are talking about 43, almost $44 billion in open interest, and that is together with the price breaking out, aggregated open interest breaking out. That is signaling traders are back in town and they're trading long, short. Everybody is putting their bet. And personally, I trade very different areas of sideways versus areas of open interest breaking out. October so far now 8% up, but we just took a retracement. We are at 4-hour support after having hit the all-time high. And I understand why people are worried, because after having done a double top, we put another pinch slightly higher. And that could be the perfect description of a liquidity hand, right? We pinch just above it, and depending on the size of the rejection to the downside, that could end up confirming that that is a local top for a while. So let's look deeper before we conclude anything, of course. Looking at CME gaps, we have this one that ends at around 109.2. That's on Binance. Starts from 110.8. Of course, the prices on CME premium is slightly higher, about $800 more expensive on CME. CME is closed over the weekend, and we close at around 122.4 priced on Binance at the same time. Therefore, all this move up over the weekend produces a CME gap like this, but price already took a retracement from 126 roughly, pushing back down into 122.8 at some point, but then it bounced slightly higher than the closing price on CME of 122.5. That means that we still have a humble potential CME gap forming if we open like this. Of course, it's just 4 p.m. UTC time in UK, so we got plenty of hours to get more fun. After all, the actual pump the previous week when we built this gap started from the very late hours UTC closing on Sunday. So people are also speculating that maybe here we can have another push. What do we need to look into the technicals? We need to look into the daily. The 4-hour is potentially already in a channel down with some rejection. But if the daily goes into the global resistance, we can get some upside as well. We need to quantify that and understand whether it's likely, low likely, or high likely. Then I need to tell you what happened to my trade. My long and my short both require a proper update. RSI 4-hour is at the top of the range. It's already printing bearish divergences. Watch out with that. It's at not a global, it's a support. Very important level of support we need to cover. We got into the second resistance on the CPR. We got CME gap up 110 plus potentially one more incoming. On the daily, the breakout is holding indefinitely. It held. It's not yet getting into the global resistance. So daily says I still have room to go. But what do we need to do with the daily? We need to see the levels of protection. Where do we have the most bullish support on the daily? If we don't understand that, we don't understand if we are still healthy based on whatever pullback we already got or whatever pullback we could get in the next upcoming hours. And the best way to follow all of this real time is after I update my charts, you go to my Telegram channel and you scroll through my charts, you request the one for Bitcoin 4-hour or daily, and you can already see that we are at support on the 4-hour. This is real time people requesting the chart for free from Telegram. Do not search for my Telegram though. Find it in the description unless you really want to get scammed. There is hundreds of fake Telegram channels with my name, Twitter accounts, Discord. It's just all over the place. It's impossible to do anything about all that scam from my own hands. Let's go into the 4-hour. Pretty exciting times looking at this 4-hour. First of all, you watch in this channel. In this, no other damn channel. They're all lazy, scratching their balls, watching Netflix, and I am the one not just recording a video on stupid Sunday, but also I'm giving you these calls that are millimetric. Look at this. We talk about the global resistance of 85 for how long? Pretty much all this range. We couldn't reach it in here, then we were waiting and waiting and waiting, and on this wave, we got to 85. That is another one and counting times that we get into global resistance. What did we say after that? That we're gonna put another high that is not gonna be as high as 85. If you pay attention to this, and if you look at your RSI, which everybody has RSI, come on, you can trade this like a boss. If you're a girl trading, girls trade a lot better than guys. You can maintain that dude, or you can even better get rid of that dude. Trading can really open a lot of doors. Tell me about it. Now we are at support in here. We are potentially pinching that intra candle. We don't know what's going to happen, but we observe and take note. Before the weekend, we talk about the support. Here we are. Before this breakout, we talk about this resistance. There we went. Now, how could this end up? Can we break this and still put an all-time high? Yes, we can. We can break out in here, fake everybody, close the CME gap over the weekend, and suddenly, guys, we go into a revenge rally into 80. The lower we start that, the more likely a push into here is an all-time high. If you only do this and then you do that, no, very difficult. What if we hold support and the next 4 hours we go into the next 4 hours into that resistance, still putting bearish divergences in here? Yeah, that could happen before we close Sunday. Someone was asking, can we put an all-time high? Well, ideally, you want to do that defending the 65, but let's be realistic. The 4 hour has been all over the place, and in areas like this, we have pinched the support and still push very high. That thing, that move that I'm showing you in red now, that can be an all-time high. So ideally, guys, we want to defend this, okay? That is the most likelihood to make another push intense into 80. Losing it, still chances, but it starts kind of declining the chances of really pushing into 80. At that point, we start looking more into a revenge rally or something kind of here in the middle of nowhere. Now, if we do an aggressive breakdown there, I'm gonna be very inclined just to do something like this and then come back down. So watch out with that. That is the 4 hour, which even though we kind of look at it as the most crappy time frame, the less reliable, the less trustworthy, still we can squeeze a lot of insights from the 4 hour time frame. That's why I use it, of course. We got the head and shoulders inverse and it target 120. It went beyond it and it reached the top of the range at 121. After that, thanks to this declining high and the support, we put a new all-time highs. As I say, guys, we can still put a new all-time high at the cost of bearish divergences on the 4 hour here. Go and watch my video from Friday. And that's what we did. Now we can continue repeating an area to the downside that could potentially, depending on where we put this pivot, start looking like a channel like this. Knowing your channel is knowing a lot of insights about your enemy. Your enemy, you think you don't have an enemy. Your enemy is every other trader in the planet, because you need to make money from this, right? Not everybody is gonna make money. So if you know that this is a channel to the downside with a decent likelihood, not with certainty, but with a decent likelihood, you are in a much better place than most of other traders, that 99% of the rest. So try to identify the channel, and that channel could end up playing out something like this, and that could give you good confidence on how to trade the next range. This could turn. Typically, when RSI does something like this, the price can do another high, but then eventually things break and the price follows the RSI. It's almost like if this is the big brother and this is the younger brother. The younger brother, the first time, looks at the elder and says, I don't understand what he's doing. But at some point, I guarantee you that it's going to want to copy the elder one. And that is what price does with the RSI. Now, that support at the moment, the 64.84, is being tested as I'm recording. It's 122.9 and my long already closed. That is because I sent to my Patreon community around 7:30 in the morning AM an update saying I'm moving my stop loss from 118.6 into 123.4. Why is that? Because I still wanted to give headroom for hitting 126 or slightly higher. We got a little bit of additional volatility and we already got stopped out in a a massive profit, guys. We entered at 111 and we moved all the way to 123.4. This guy can go to hell now, up or down, and I don't care. What I'm looking now for after this steady move up is for a re-entry with good risk to reward. And I'm gonna be looking for that. And if I find one over the weekend or on Monday, my Patreon community is gonna learn it first, but it will always appear in these videos. Let's look at the daily. Question, $1 million. What the hell happened with the Gartley pattern? I think it's invalidated. Somehow the pattern is still appearing in the chart. That means that the indicator thinks that it's still valid. Personally, I think it's not, because we got a candle close very close to the high. It's still below it, but I don't think it's respecting the ratios of Fibonacci that are described in here and in here. Still, if this candle closes the daily like this below 123, let's say, that pinchy candle still in green is still bearish. Well, if we turn it into a red candle pinching up, that could bring back all this move from 35, 36 that went into 70. That's a huge move into now looking for support. Remember, the support is at 56. But I think going to 56 now retraces all the gains. So we need to look for other sources of support. I think that 117.8 could turn next into support if price starts retracing big. I don't know if it's going to start retracing big, but it's always good to know your levels before things happen, if they happen. We got daily resistance of 84. That is the level to watch if you are still extremely bullish, holding on to your long and thinking that you can still squeeze more. It's not my case. I think we can still go higher, but my risk to reward and my exit, I am fine with this. I'm not entering until I see a little bit of a pullback again. So from 17 we have upside into 84 more or less. That's 14 points additional. That means price can go now as of today, and as of now that RSI target moves all the time. You need the indicator, and you probably need to see my chart as it develops hour by hour on Telegram. It's 137.8k by now. That's the upside if this RSI wanted to do the same as the 4-hour already did, which is to hit the global resistance. How can it do that if the 4-hour is already potentially indicating that we are going to enter in a downwards channel? Because the 4-hour can take a breather, move down here, reset with price going sideways. Yeah, that can happen. Price doesn't necessarily need to come down. It could be a bullish consolidation. A bull flag that comes down, even goes into 117, holds certain levels, and still eventually pushes back up. So you get the 4-hour resetting partially or fully, and then the daily comes just into 64 or into 63, and then it resumes all the way to 83. By doing that pullback, this target can go higher as well. Know your RSI. Watch my tutorials. They are all in my channel. Once you go into playlists, go into tutorials. If you're new to the channel and you haven't watched this, go and do that. If you've been watching this channel for a long time and you still don't watch the tutorials, what's wrong with you? Go and find a mirror and start slapping yourself until your cheeks are bleeding, metaphorically speaking, of course. Volatility is already on the top end for the 4-hour, okay? So that's very important. If we get into the top end, we start squashing a little bit. Here is a bullish consolidation. Beautiful. You see the RSI on the 4-hour went to the top of the range. It visited 85. Perfect. It retraced back to 44, but price continued going sideways. Pulled back just before resuming, and that goes into a new all-time high, right? That's how we did it. I'm explaining the recipe to potentially do it in a similar way. I am not telling you it must happen that way, but if you know how it can happen, you can adapt your strategy to multiple potential situations. We are on the second resistance on the CPR, and it looks on the daily with the intra-candle situation as a rejection of the second resistance. The third is located at 129.5, so that means that in October we still have range to go further. We have been above the top level of the CPR, although I don't remember when. I think it's in here in November 2020, not very frequently in October in 2021, which is the equivalent year. So yeah, you know, October can come from below the CPR and go all the way up. But this month in particular, it's looking very bullish, and we are in a virgin month. So watch out, guys. Use protection. This is scary. And we have, that level at 113, the pivots. That's where we lose virginity. And if we lose virginity, that is definitely gonna hurt. Look, that's a 10% down. Now, if you are thinking, no, wait a minute, I'm very bullish, it's impossible that this happened. What, impossible? Are you sure? That is a retracement of 11% in October. If you're not prepared for that, think twice. This shallow price action that you can see in here in October moved down from September into October 11 to 12% as well. So just last year in the same month. So it's not a forecast, but it's a watch out with that. Now on the weekly, again, it's the start of the show. We got an engulfing candle that is in progress for a few more hours, closing tonight, and it could put the highest weekly close for Bitcoin. That is definitely gonna call a lot of people. With these dimensions of candles, you typically get a bit more upside, but all of that depends on how this candle close. This, at some point, someone told me that it was green, and it was, and it looked beautiful on an all-time high, all in green, but eventually crossing red below 120, and it sent us back into the bull market support band. My forecast is that if by Sunday close we ever did something similar to this, which is to close all the way down with a long wick on an all-time high, coming back down into all resistance at 117, I will speculate that that could be the rejection that puts us below the bull market support band. And then we need to focus on where is the 50 weekly. We're not there yet. I'm not forecasting it's going to happen, but it's always good in your bag to carry some patches before the wound. That's a Chilean say. I don't know if it exists in your country. Let me know in the comments. Weekly resistance, where is that? Well, on the price, we already talked about it. The resistance is pretty much 125, 120.5, and the all-time high of 125.7 right now. That's the highest high. But on RSI, on momentum, where do we break to the upside? And I just realized of something that I never saw before, which is I'm using the index in here, and in here I'm using Binance, and they have different prices, believe it or not. That is very annoying, but the resistance on the weekly on the index is 69. That is the resistance. Interestingly, the all-time high in the past cycle was 69, so it will be really weird that this cycle we top at 69, but this time on the RSI weekly. On RSI here weekly on Binance, the resistance is slightly below 67. That's a huge difference, guys. And I'm tracking it. That 67 on Binance is 127.989. But on the index is 131.3. So what do? Well, I prefer to follow Binance. There's the most volume traded there, and the index, who the hell knows if it's tracking properly everything. But anyways, that resistance on the weekly is 127.9, and I reframe now what do we need to have a right translated cycle that spills into 2026, right? If we're talking about Q1 all-time highs, Q2 all-time highs, or anything beyond that, we really need to break the pattern of getting rejections in the bearish season in here. We start that from 73 with bearish divergences. In the previous cycle, we started from 38K the first time we put here an all-time high in January in 2021. Since then, the momentum declined and we never broke out until we were in the depths of the bear market. If we don't want to repeat that performance and see a rejection of 128 and still have higher than that all-time highs now or in 2026, we must put a candle close weekly, and I said 130, but on the weekly is 128. Keep that number in mind. We got a signal, guys. We have a yellow signal on Bitcoin leverage squeeze. First one, I don't know how many we're gonna get. We not always get multiple. Here we got, I don't know, 5, here 3, here this one is the first one. This first one in here in October had a drawdown of 8% before resuming. So that is something, right? So if you short that with a 7% 3x, it's not bad, but then it resumed all the way into all-time highs. Now, if you average up these 3 ones or 4 ones, you got a very good entry to short into 74. So I'm gonna monitor this one. I already have a short. It printed at 126k. SOPR not sounding any red alarm. I don't see yet updated this. Potentially by tomorrow on Monday, we're gonna see a new reading and maybe it's gonna spike very big if there was substantial distribution. I suspect it's gonna point up. I'm not fully sure it's gonna make it to the area of the high percentiles, but we'll see. And guys, on the monthly, we are hitting again RSI of 70 intra-candle in October 2025. Previous cycles, it's all about being above 70 RSI on the monthly, and now we are pinching it. Just to be very precise, we got a reading of 69.73, but on the all-time high we were above 70. Most certainly we've been above it 1 month, 2, 3, 4 months. Very little, that's a 70.1, but we don't have any 2 months consecutive 70 at all. And that is something that we are missing this cycle, guys. Previous cycles, we used to do that, and the volatility continues to be really poor. On the monthly, the stochastic RSI still says the same. We need to break to 130k, close there the month of October to put a bull cross that invalidates the previous bear cross that we already settled in September. Pretty tough job, but if we get into 130, the weekly and the monthly are gonna have a potential breakout incoming, and maybe at that point we can start talking about 2026. But if not, everything is according to the regular schedule of ending the cycle by the end of the year. If we get those signs to poke our shoulders and say, hey, I'm ready for more, that is the way to confirm it. Now, futures open interest is very elevated at 13%. I'm not looking for a long yet. I need this guy to cool down. I'm not nuts. You can scalp it and stay in front of the monitor right now to take some longs and use momentum trading. That is not my style, and I don't have time for doing that. I'm barely managing now to do this video, and if I don't finish soon, I'm gonna get wiped. No, I didn't want to say that. Sorry, I don't remember the word in English. Is whip. I'm gonna get whipped? Well, whatever. If I take too long to finish the video because I'm supposed to be helping with something completely different. But hey, guys, you're very important to me, so I managed to get the necessary permissions to do this. And yeah, we could say we ended the period of liquidating longs. We went straight into the middle line. So we'll see now if we can go into the negative. Definitely, we are seeing a lot of activity in futures. Long-term holders are distributing at a slow pace, I will say. We are at 74 in grid. So I think one more point and we go into extreme grid. At that point, guys, we really need to slap our face pretty much every day to make sure that we don't get any FOMO. Let's look at liquidity. Very important to conclude, and the order book. I'm gonna go in depth with all of that. Number 3 has been hit. So we took 1, 2, and 3 partially. We still have more than half of the third liquidity in the short term. On the lower end, we took 1, and I was very inclined and supportive of the idea of taking 2 before this move up. But how did I hedge against the possibility of not hitting 2? What if this is a trap and it wants the longs to wait for 2? What if market makers say, let's just leave them there, let's not take that liquidity now, and let's start the rally? We're gonna leave a lot of people not doing them anything. That's why I enter along in here. That's why. And I was thinking to average down if we go there, but I didn't need to. And I went all the way up, which was fantastic. I was called a clown at least 5 times that week. It's incredible. I was told that I'm dragging everybody into losses, which is absolutely no sense. They went completely quiet. No one talks to me when I'm in a winning trade. When I'm slightly in a small drawdown, I got liquidated. And by the way, no losses in the last year, no liquidation. So all of that is absolutely made up. Ask anybody in my Patreon community that has been for a full year following the trades. On the daily and the long-term liquidity, we can see that we are about to hit the 127.2 target. We got very close with this week. I will say we took half of the red biggest liquidity pool. We are leaving on the table half of that and this one at 129, around there. Then if we get into 130, things become a lot less attractive as we approach the area of the vacuum of 133. If we cross 133, if we are still holding around that level with candle closes, I will say it's very likely that we go for the 136 because there's a heel there. And then the last one that is big is 141. At some point, you can enter a bear market and leave liquidity behind, meaning that market maker can allow that some shorts are going to take a huge massive profit into the bear market. The point is that there shouldn't be too many of them, because otherwise market maker will make an effort to wipe them out of the way before producing the collapse. If we take a lot of these liquidity pools in here are going to start looking in the red, because relative to what we leave up, it might become bigger. And now we are at the highs in here. In the past 3 months, the largest continues to be 107. But if we focus on the last 30 days, the biggest peak of liquidity is 110.5, followed by 108.2. There is a decent dense area in here centered at around 117. And let's see how we're doing in liquidations, because I'm very curious. Did we produce a massive red in here? Not yet. That's crazy. That is an alpha of potentially market maker needing to go slightly higher to get more of that liquidity, because remember, this liquidity is speculated that is there using an algorithm. This system, trading different, doesn't see the reality. No one does. So by quantifying here liquidations, we could say that either there's still a lot to liquidate to the upside, which is an alpha that is bullish, or two, this platform is not up to date and maybe there was a big liquidation and is still not being tracked here. Now, what happened with the selling wall? It moved right after impact. The almost 90 million moved into 130. Now it's less volume, it's 55 million. Interestingly, the purple whales are not taking part on all this rally. That is just crazy. It's only about brown whales. And at 123.5 currently, we have this resistance. So once we pinch almost 126, I exit around there, and now price is slightly below it with that resistance that is formed by almost 3k of resistance. Let's see if that's gonna give up before the close of Sunday, and let's see what happens on New York Open as well by tomorrow. Net longs are at the highs, whereas net shorts have been kind of going sideways, but the open interest is still at 102k. So something tells me that this amount of open interest, a big proportion belongs to longs, and we're gonna see that in high block capital. Let's have a quick look into the delta. The delta is sitting at 780k, so longs are in big risk. We have the 117.8 open interest, the largest now. That's 536 million. So if market maker wanted to do a larger liquidation, you got two reasons for market maker to hunt that level at some point. Number one, the open interest is the largest spike of new positions entering from there. Second, that is previous support. So sometimes when you get this kind of reaction of pinch and then another pinch, bearish divergences on the 4-hour, you take a deeper relative to all the rally move down. And that could be to go into this open interest and consume that reward. Now let's look at how the order book is looking, but let's not give that much importance because it's weekend and there's usually less volume. Yes, there's been an all-time high, but I guarantee you that the amount of volume is still low because it's a weekend. And we have resistance in the first 0 to 1%, then support in the 1 to 2, support in the 2 to 5, support on the 5 to 10, on the 10 to 20, and in the 20. So pretty much just that first 1% is resistance. Probably that 123.5 that already changed, as you can see, is resistance, but then we got a lot of support. So maybe that, if it doesn't change by Monday, New York, it could signify that we are going higher. Funding rates are in the positive, so there's tons of longs in in position relative to when we were in the negative that dragged the price up. Something that will help the price going higher at the moment is if the funding rates took a dip into the negative during the visit to 117 or 118. If we see that in the red there, that could be a decent swing up that we can quickly put a break even in a long and then see if we can run it into higher, or if we get stopped out with no loss and we repeat it from lower. Yes, there is a huge amount of open interest that hasn't been taken from any side so far. That's why we haven't seen that much liquidations, and that's why we see the open interest still at 120k. So that those are shorts and there are longs in here, and there is that moment where price needs to decide if it's gonna break support of 122.4 and go for deeper levels of liquidations, or if it's gonna just continue with what has been doing non-stop, which is liquidate shorts, shorts and shorts and shorts, and only shallow longs. Fair value gaps. We have a huge party of CME of fair value gaps to the downside. We got up until 120.5, up until 118.6. This is the most important one, getting into 114.8, followed by the one that overlaps with the previous CME gap. I think is this one, the one at 106. Sorry, that overlaps with the liquidity, the largest one in the last 30 days. This one overlaps with the CME gap, just to be fully correct. CBBI increased from 76 to 77, so still not calling for the top of the market. So in a very quick summary at the end of the video, this is not gonna go to Patreon and YouTube members because I don't have any team working on Sunday and I cannot spend the rest of the day doing all of this work. So I will resume doing so in Monday, tomorrow. So in a summary, I am in a short from 118.6 and I'm looking to average it up if we go into the remaining part of the heavy liquidity that remains around here. We might not go there, I don't know, but I always like areas that give me a huge reward at a low risk. So not yet my second order. On my long, I got stopped out in profit. That's a massive profit, so I'm very satisfied with all this leg. If I look at all these legs, we could be in one that just continues with bullish consolidation, or we could be in one that takes a larger dip. I don't know, but if we do that larger dip, I already discussed some areas that I will be interested to re-enter in a long. So I got you covered for all of those things. Huge emphasis on the weekly resistance, on the candle close, but don't worry, we will cover all of those in detail again on Monday together with general markets, all coins and all of that. Thanks so much for watching. I hope you appreciate the effort of putting this video on a Sunday. It's not a Sunday alpha, it's just an emergency update so you know where you're standing. Thanks so much. I'll see you in the next one. Bye bye.